This conference will now be recorded.
Hi everyone, it's Patrick. My position on how to trade FX, and the date is the 4th, just checking, the 4th of November. The time is 8 o'clock, but I'll probably post this pre-Asia. And we have Beat in the house. Hi Beat, how are you?
Hi Patrick, good evening. How are you?
I'm very well, mate, very well. Bit of a bloodied nose on some risk on rallies for myself. I'm not alone on that, am I?
No, you're not. That was not the best week of all weeks, but we're there. We get knocked down, we stand back up, and so we did, and we
Yeah,
continue to do so. So yeah, it was a bit unexpected the extent of the rally based on a lot of fake news, let's call it. Yeah, so here we are managing another week.
yeah, absolutely. So I've got loads to go through today in today's edition. I guess we're going to do a real focus on. There were two things. One is obviously what happened with the China, um, the tariff expectation, and how that was kind of thrown back as well. But I think let's just kick off with the US midterms on Tuesday night. For me, my thoughts are I've seen some polls, and I take polls after Brexit, after the Scottish ref, after the US election, where it was a slam dunk Hillary win. After all of this, I take polls with a big bag of salt. Um, that said, there are some polls that are fairly credible that say, one of the particularly the House is looking to go to the Dems, and if that does happen, what's the trade, and also if Trump stands, regains both, is that a trade? For me, obviously the big one, the biggest probable move, we'll talk a bit more about that, and I'd love your thoughts, B, is if the Dems get both, and what happens if they do get both. Will they put their hat in, for an impeachment? Even them mentioning it would be catastrophic. So lots of stuff. What are your thoughts on that, B?
Well, if you go through the scenario, if you want to start with the most volatile one, where if he loses both houses, to be honest, I would just press the sell button on any risk. I think we won't even get to the point where people will wonder whether or not the Democrats are going to try and proceed the impeachment. You just have to take it as a given. They've been very vocal about this, for the last many months, that that process will go through. And as people may know, it's a political process. That means the House of Representatives is going to initiate it. The Senate has to vote in it. And so if he loses the Senate might actually vote for impeachment. Now, whether that is actually going to happen or not, I think that's just how I would trade it right on the night. I would just think stocks are going to just crater, absolutely crater. I think, whether all the liberals like it or not, the stock rally is on the back of the business-friendly policies of Trump. Yeah, of course, the economy is doing well, like, businesses are doing well, companies doing well. So, some of it has been fundamental, but the other part is the best business friendliness of Trump. So if you remove that, I think the market will be very scared on how some of the policies are going to continue or not. And just as a knee jerk, I think, the Dow is going to collapse 10%, within a few days. I really do. So that for me would be the immediate trade, and you don't have a lot of time to hang around at night. That's why I'm going to spend all night in front of the screens anyway. Is it likely? I think no. The odds for that to happen, I think, is pretty low. I think he's going to keep, if he's going to keep something, it's going to keep the Senate, which makes his whole impeachment story just, I don't think Congress will even bother unless they want to grab some headlines. But if the market sells on that, then you probably have to fade the sell-off, because it's never going to go through the Senate, that is controlled by the Republicans. Now, we talked about it off screen a little bit. Well, there's two different sort of opinions out there. If you believe the polls or the expectation, it's going to lose Congress, it's going to keep the Senate. I spoke to some good friend in the US last week, and he said it's 2016 all over again. As in, it's going to be a landslide red win for Trump on both houses, which, you know what? Yes, I can I can actually see that happening. If we just, but again, it's really just a guesswork. So if he keeps both, I think we're going to see, stocks extending maybe the rally for another few days as a sort of victory lap. I still think there's fundamental reasons to be bearish stocks, and they are just out there. They will come back very quickly. And I think what I want to see is how big the rally is on such a double whammy, as in if it wins both. If we just get the marginal rally, I will sell risk immediately, because I think if you in the market and you have like continuity and Trump keeps both houses, you would expect the Dow to go another 5, 6, 7, 800 points easily. If you see only a rally on the day, 100 or 200 points is actually bearish in my opinion, because it should rally more. And so for me, it's really, that's why I'm going to spend time on the screen just to see how big such a rally will be. Of course, it's in the night. We only can watch a futures. The big Dow guys aren't there yet. That's a little bit harder. Maybe we have to wait for the 7th in the afternoon to see what Wall Street is really doing. But to be honest, like you, I'm core bearish risk anyway. So this midterm is just maybe a short interruption of, let's call it, for a small victory lap for the Dow if Trump wins both houses. But it's probably the only midterms that the market did ever care about. I can't remember. I spent every night in my entire career, every night in front of the screens all night in election, referendums, you name it. I've never spent a night in front of the screen for midterms elections ever in 35 years. So, maybe that gives you a little bit of an idea how big they actually are.
I think there's definitely trading life before Trump and trading life after Trump. So
Yeah.
I think that says a lot, really. So I guess, okay, if he wins, my question to you, B, is if he wins, well, if it's stand pat, so he retains both houses, where's the trade?
To be honest, I will not trade at all.
Yeah.
I will wait. I think it's an equity trade, not an FX trade.
Even
Yes.
Aussie yen?
Yeah, to be honest, yes, it's gonna bounce, but I just gonna wait to sell it, really.
Yeah.
I will not go long risk in 2018. I can bet, I can tell you that. So for me, it's actually, in a way, I would love this scenario, because I wouldn't mind getting Aussie yen, being able to sell Aussie yen at a bit better, more comfortable levels. So I would not play the upside. I would just sit here, watch the bounce until I feel stocks start to rally out of steam, and then start to sell risk. I will not trade. I will not trade the upside. To be honest, a hit and run trade, maybe. Depends on how I feel, or how if I see stocks going crazy, I might do a bit of hit and run trading. But in terms of real positioning, I will only sell. I will not buy. I will not be on the upside trade. Yeah. And to be honest, it's only going to be a correlation trade. I don't see, an FX trade outside of stocks in the midterm election on this scenario that he wins both. It's a slightly different story if he loses both. Then there is like a whole lot of trades out there to do, and they're all between, the BOJ is going to be very busy trying to keep up dollar yen if that happens. I think dollar yen is going to get an absolute shoeing. That makes the Aussie yen probably the best high beta trade, because, maybe I'm wrong, but if he loses both sides, my inkling is stocks are getting absolutely nuked. Whether for good or just as a 1-2 day accident, I don't know. But I just think it be not be good for business, and I think it won't be good for the confidence in the US. And don't forget, we haven't even mentioned one thing. And I read 2 articles about this, and I know it's a very delicate topic. The fronts in the US, it started under Obama, where politics started to become very nasty, and that has only increased now with Trump. And I don't want to say the word civil war, but I want to say that if he loses both houses, if they will proceed for an impeachment, to be honest, personally, I start to be very worried. I know it sounds a little bit like I'm a Sun journalist or something and trying to make headlines, but to be honest, I'm usually not so bad with gut feel and with these kind of situations. And if you see some of the reports when Trump travels in the blue collar area, how much I love him, how much I think he's turned around their lives, and they're passionate. These are the guys that get their guns out of the cupboard. I tell you that. And it may sound crazy, and I may sound like losing it, but you don't want to be in this sort of blue belt area if Trump gets impeached. I tell you that it could get really nasty, and that would be the only reason. If the Democrats are clever, if they do win both houses, they have to treat very carefully on what they do, because they could actually lose the country. So I'm just saying, I don't think it comes to it, because I don't think it's going to lose the Senate anyway. So all this is maybe just smoke and mirror. But you don't want to have that situation. I think if you speak to people in the US who know the political scene and been around for like a long time, to compare it with other presidencies, I don't think politics have been so divided at any given point in the last 50 years in the US. So it's quite a little bit of a delicate situation, I think. But personally, if I had to bet, I would actually bet for him to win both. I kind of like that idea, but to be honest, I'm not going to be positioning for it anyway. So it actually doesn't matter what I think at the moment.
Okay, so you're going for both wins.
Yeah.
I'm going to go for the Dems taking the House and the Republicans retaining the Senate.
Okay, we sort that beer out on the next my positions on next Sunday.
yeah, exactly. So I either way, whatever happens, I mean, if he keeps both houses, so the House and the Senate, I would look at reaction. I'd probably still want to be fading any rally in risk. I've got Aussie yen at the moment. I particularly like 84.50. That's quite, that's definitely, let's just see what happens. But I'd be happy if he wins both there. I'd be happy to sell into that. I'm not sure what your thoughts are there, Beat.
Yeah, to be honest, I would be shocked if you get to 84.50. I mean, it would be a dream level, but I'd probably, by that time, I'm already probably short somewhere around the 83 handle, I guess. So that sort of line, if that's the Aussie yen chart there, you just draw these sort of lines from all these highs. That's probably where we are, more or less. And to be honest, I think I would hope we stay below 82.50 already, 83 maybe max, something like. Yeah, where does this line come in? Just below 82.5. That's maybe a bit tight. That's probably a bit tight, but 82.50 to 83 is my sell area, no matter what happens. So we'll probably sell smalls into the first rally and then just take it from there. See, because risk has rallied very little actually overall, given that we've done like a tremendous rally. We're probably 1,200 points off the lows, more or less. in the Dow, or maybe thereabout. And so I think the pushback in risk has, the last 24 hours or 36 hours was a bit painful. But before that, and even now, it's not been that massive overall. And I think, like we said, for me, the bearish reasons are fundamental. It's higher US yields. It's really the cyclical top in the US economy. Maybe not top as in, it's already coming off hard, but I think we kind of there or thereabout. Most of the stuff in the US economy is priced in. We have the Fed reducing the balance sheet. So, like all the reverse from the big rally from QE. And I think fundamentally, I think stocks have turned. I really do. And so any rally from here is just a feel good factor on the election, but that's going to fizzle out within a day or 2 or 3 days. So I don't think you position yourself for risk, for a risk rally. There's some JP Morgan, I think, is laughing at the bears, saying the bears will create the year-end rally in the Dow. We shall see. But that's just the other view. So there are actually people out there, or a lot of people that think, the dip is over and we're going to rally from here on. I just on the other side, and I stay on the other side for now.
Yeah, I mean, what you're saying before about the BOJ's obstruction, not obstruction, the BOJ's having any kind of potential footprint on stabilizing dollar yen if it starts to tank. I know that if you do get a risk off, and I think equities, because of equities taking charge and really affecting effects at the moment, certainly the last 3 weeks, as you know. I think if they go south, then dollar yen will not. I mean, it will not be able to put up much fight.
No, I agree.
BOJ on its side,
But that's why it's probably the better trade is short Aussie yen and euro yen.
Yeah.
Because what we've seen, remember when the euro went down to the lows, it was really euro yen pushing it down because BOJ or let's say his number twos were fiddling with dollar yen.
Yeah.
And I don't think they try to maintain a certain level. They just try to smooth a move.
Yeah.
But that's why I like. I still probably, if I can sell dollar yen on a 113 handle, I probably still will do that as well. But my bigger focus is on the cross, because in case the semi-official I think Japan are smoothing the move in dollar yen, I think then it's just euro dollar and Aussie dollar gonna take the pain. I'm gonna sell straight Aussie anyway as well. So I'm gonna be selling Aussie dollar, Aussie yen, euro yen. I leave it probably at those. I don't want to have like 4, 5, or 6 different positions that all need the same story. That doesn't make a lot of sense. So I'll probably stick to those 3. Other people may fancy sterling yen, but sterling to me is just too complicated with Brexit. So I stay away from that one as far as I can. Then the one thing we haven't mentioned yet in this whole scenario was the big move in dollar CNH on Thursday, Friday, right?
Absolutely.
Down to 685. I think PBOC was helping the move, because I don't think it would have come off on its own that quickly. I think that was lesson number 1 about don't take me on kind of move. Then when we had the White House denial about this, imminent China trade deal, it obviously turned. It's back at like 690. But I think we talked about this for the last many weeks about dollar CNH, and I think I watched it Thursday, Friday, and you could just see how they enjoyed the pain they inflicted out there, and they did, because positioning in dollar CNH is very large, because you need a big position if you compare it to the other risk, because in percentage terms, it doesn't move a lot. So positions are usually a multiple of a normal size position in Aussie dollar, euro dollar, dollar yen. So that's why it did inflict pain, quite a bit of pain, I would think. But interesting.
Yeah, I've got euro dollar up, which is some would say the exact same as dollar CNH. But for those of us who have been around a while, and you certainly highlighted this to me. Very interesting double bottom there at 113, the big fig. Very nice. That's now a formidable level for me. It's pretty strong. But you highlighted this to me. I quite like 114.30, but I sold into the 60 area, which
Yeah.
is a lot stronger, I think. And you very kindly highlighted that to me. I think you blogged it on LinkedIn as well.
To be honest, I just love it if I have like a sort of triple whammy. Obviously, on Monday the level's gonna slightly be different, but on Friday we just had like mid-daily Bollinger Band, daily downtrend, and the FIBO retracement from the entire move 103.5, 125.5. So if I have like three indicators that I even respect individually, and I have like three of them all at the same level. For me,
Yeah.
114.65 was just no way we're gonna break. So that was a nice sort of sell into the rally on Friday.
Yeah.
And I guess, what you mentioned, I think on your email about interest rates, 10 years back to 322. You had a solid non-farm, you had solid average earnings,
Yeah.
the highest yearly average earnings since 2009.
What was unemployment? 3.7 now.
What the year now is 3.1, but it comes from 2.8.
Oh,
So,
okay.
so we've jumped from 2.8 to 3.1. To be honest, it was expected at 3.1. So that's why I didn't like create a crazy rally on the day.
Yeah.
But it just sets a sort of tone. It's probably not high enough. What we discussed last week is, we're looking for that smoking gun. It's probably not. So we still stick to December hike and 3 hikes next year. That hasn't changed. So 3.1 doesn't change that. So we're still looking for that, data to accelerate to bring us to, shifting the expectations, which are probably, it's just been solid numbers, which means that's why yields are back above 320. They're probably not going to go 350 that quickly. It just sort of keeps the dollar support, well supported without it probably pushing the dollar up aggressively. So that has probably to come from maybe the risk off or some other corner.
Yeah. I think three spot 10 is a key support on the 10-year. I'm looking at 30 years as well, because obviously a couple of weeks ago we had that yield spike where both short belly and long end really lifted significantly and kind of chopped around a bit, but still regained. I think the 3 spot 25 on the 30 is quite formidable, and I believe that broke. And that to me is more of an indicator of long-term growth and inflation. And obviously the belly, i.e. 10 years, more for those retail viewers that we have, is more indicating of rate hikes and inflation. Obviously the 2-year is all about rate hikes. But interesting stuff, really. I mean, I guess it's it's going to be an interesting week, and I'm going to, just a personal thing, I'm not really going to start actively properly trading any midterms until close Tuesday night. I'll be offered up risk on rallies somewhere, probably euro yen, Aussie yen, that kind of thing, and start smalls. And if you are retail and you haven't traded a live event, just be really, really careful. Both Beat and I have been doing this for a while. Just be super careful. Don't lump in any size. So don't forget, you've got a lot of heightened risk. You've got liquidity. You've got event. You've got your trade risk. And markets are going to be wanging around on very little size. Then you've got all of that. So just what I always say to my students, and I'm sure you do with yours, Beat, it is increase, decrease your stock, decrease your size, maybe increase your stock, but just overall dial your risk down, because
it's the old rule: high volatility needs lower risk, right? Because you make the same amount with half the position. So
exactly.
It's a no-brainer. I absolutely agree. Because things we just don't know, right? It could be maybe we did talk something and something complete different happens. You never know. And you know, to be honest, without the big stock rally we already had, I would probably been more nervous for a big rally in stocks. But we had such a big rally in the last few days that I think part of that sort of bearish positions are probably already unwound, before the event. So that's why I think that, even in the rosy scenario of a red landslide, probably the upside is a bit limited. I remember, I think there's a big level in S&P somewhere around 27, 60, 70. We got to about 58 or almost to 60 last week. So 27.60 to 27.70 is very big technically in
Okay.
S&P cash. And so that will be a level I'll be watching. I'm not sure exactly what the equivalent is in the Dow, probably around 25,700-ish or something like that. But it's hard to completely compare because they're not quite the same thing. But if you just go from a percentage point of move, that is probably the area where I would expect things should start to run out of steam. But but like you, I will do a bit of hit and run trading if there's opportunities. Intraday, Monday, Tuesday, I will have no macro risk before the midterm elections. So 10 a.m. is, 10 a.m., 10 p.m. is when we get the first exit polls, probably from the East Coast. I'm not quite sure about the legal side of things, if they're allowed to do it or not allowed to do it while the West Coast is still voting. The first indications are that between 2 a.m. and 3 a.m. GMT, we should get a very reliable result. Not a definite result, but we should, by 3 a.m. latest, we should kind of know where this is heading. So our eye is going to be like this. I'll probably have a little snooze from 6 to 10 p.m. and then spend the night in front of the screens.
That's great. I just thought there are two things. One is the risk on reprieve or the recent risk on rally. I think was pretty much. Could we both agree it was largely due to the Trump tweet on
Yes.
China deal? And obviously there were reports on, was it CNBC afterwards saying that this that. So I guess this is the thing about being being around a while, knowing that Trump's not going to blink, China's definitely not going to blink. So and the timing of the Trump tweet is all a bit fishy. You said this, obviously, you've said this a few times. And that's all great because we've been in the game a while and we know that didn't stop risk on, right?
No.
So I guess I was a bit shocked at how much we rallied just on that tweet because obviously the market is the market. Market's always right, as you know.
Yeah.
But it's a case of being too smart or too knowledgeable about it.
To be honest, I actually did cut some risk back already early in the week because I just realized that things aren't trading the way they should. So I was still short risk, but I was a lot less short than I was the previous week because I just sensed that something doesn't add up. And I was sort of, you're never happy when you lose money, but I was sort of happy that I kind of took note of the gut feel that something didn't trade. And I think I was even sending it out on Thursday morning when I said to people, it feels like a very emotional market, and emotional markets are dangerous markets. And so I smelled it. If I be more flexible, if I'm more in the hit and run mode, I would have probably flipped positions because I just knew it's going to go up. But because my view is so macro based, really strong, I didn't really bother. I then just stopped out at the sort of key levels. and got some shorts back in a bit higher up. But generally, for me, the important stuff is like we said, it looks like it's probably fake news or good timing to create a stock rally and ahead of the election. I then just can't, I might be short less or I take shorts a little bit back, but I would never go against a gut feel that this whole story stinks. And I just could not get myself to, be long risk, even though I saw this could just go a little bit out of hand. And I much rather take it on the chin, and that's sometimes what I say to my students as well, or people generally when I talk about positioning, is always I ask myself one very important question: am I more angry at myself losing money with my core view, or am I more angry if I try to flip and then lose money against my core view?
Yeah.
And losing money against my core view is upsetting me for weeks to come. So it destroys my trading in the days that follow. So that's why I much rather lose money on just been wrong, rally went too much, buy some stuff back, regroup, look at the charts, look at the story, look at new levels to get, if you still kind of, and that's why I briefly was flat. I just go like, okay, sometimes you have to be flat to look at stuff. If you still position, you're a bit biased. So I closed everything, looked at it, looked at the story. The story for me was a lot of rubbish. The levels started actually to be looking with Aussie yen went, nearly to 82. So the levels suddenly looked a lot better. So I got like, okay, what the heck? And I went back in. But yeah, no, as I said, I much rather lose money on a conviction trade than trying to be clever, flip flop, and then lose money. I would just, if I lose money on a conviction trade, I can literally get up and start trading again without having like bad sort of memories or hurt or sad or whatever. I just was wrong, boom, move on. The stuff that I flip flop and lose money, that lingers for a week or two. I hate it, so I don't do it. Sometimes costs, but we're not there to make, we're not making money every day or every week. That's just part of the game, isn't it?
That's right. Well, that's fantastic, Beat. Thanks for all that. I guess I'll finish by telling our viewers what I'm going to be doing on Tuesday night, because it's all about Tuesday for me. And I personally, I'm going to wait until the end of the North America session, and I'm going to be laying in offers on risk pairs, Euro yen and Aussie yen. See where the market kind of starts to close on North America close and into Asia open. But I just see this as a sell. So let's just say in all the scenarios, I just see, let's just say if Trump keeps both the Senate and the House of Rep, it's going to be sell the fact, not buy the rumor for me. If he loses one, still you probably get a little bit of a risk off knee jerk. If he loses both, it's going to be hammered risk off. So all of that together, I just see as sell that risk, but at what point, So that's my take on that. What's your take, Pete?
Yeah, pretty much the same. To be honest, low risk until the event. Then I'm just gonna watch stocks like a hawk, and really I couldn't tell you now what I'll be doing because it will all depend on to see how stocks react. Whether they rally strongly, sell off strongly. I have to actually rephrase. If he loses both, I'll be active immediately. So I will just sell the positions we talked about: Aussie dollar, Aussie yen, Euro yen. If he, as it's sort of predicted, loses Congress and keeps the Senate, I just lean back and then decide. So if I see a marginal stock rally, I will get short risk very quickly. If I see 200, 300, 400 points in the Dow, I'm just going to lean back, see how high euro yen, Aussie dollar is going to trade. Hopefully, we then get close to some of our chart levels where I go, you know what, good risk reward area, and get short there, which then allows us to have a stop probably above the big key areas. And if the big, like your 84.5 in Aussie yen, if that stuff starts to break, then I have to start to review this whole risk off story and just start from scratch. So it's quite a big week in a way. Like we said, Aussie dollar was in a downtrend all 2018. It finally has broken out of that downtrend, even though we have to say that downtrend actually caught up with the market, because Aussie hasn't sold off anymore. So the channel just caught up with Aussie, which usually I don't take as serious of a break, like when the market challenges the channel and then breaks. This one was just like basically we're running out sideways and then jumped. So, but it held for 10 months and it's broken. And we're outside of it. So
Yeah.
It's some fresh work to be done. But no, very flexible. I will watch equities like a hawk. And as I said, minor rally I get short very quickly. Big rally I lean back, wait for better levels. But I will always sell risk. I will not buy risk.
Great stuff. Thanks, Pete. That is absolutely phenomenal. Last but not least, I just want to go through some of the excellent work that Pete does. He provides a service, and just maybe tell us a few words about that, mate. Pete?
Yeah.
Hi. Just to say, do you want to say a few words about that amazing commentary service you?
Oh yeah, sorry, I got just a little bit distracted exactly on that product. Yeah, no, what I'm doing is I'm sending sort of the core charts, 4-hourly daily charts out in the morning with a little sort of research piece on it, theme of the day, risk reward trades, trade IDs. I sort of update usually my people about key news and try to sort of show how I sort of read the news. And yeah, it's if there's something you want to know more about it, just ping me or Patrick, and we can give you some more information about it.
That's great. Well, thanks again for a great lively session, and good luck on Tuesday night.
Yeah.
And watch that risk.
Watch that risk.